திரு AnandSrinivasan அவர்களின் சாதாரண பங்கு அசாதாரண லாபம் தமிழ் வடிவம் இப்போது கிண்டிலில் கிடைக்கிறது. இந்த புத்தகம் புதிய முதலீட்டாளர்களுக்கு பங்குச் சந்தை பற்றிய ஒரு அறிமுகமாக இருக்கும். இந்த புத்தகத்தை நீங்கள் கிண்டிலில் வாங்க விரும்பினால் வீடியோவின் கீழே இருக்கும் லிங்கை கிளிக் செய்யுங்கள்.
Good evening. Today I wanted to talk about inflation. Yesterday we talked about American inflation and how consumer price inflation in India is relatively better off at 4.3%. But I also warned you at that time, since there was no data for April, May of last year, we really didn't know what was the inflation. But for all practical purposes, consumer price inflation in India has been between 5 and 7% for last 1 year. The claim then made by the supporters of the government was that wholesale price inflation was very low and therefore WPI was what mattered and CPI was an artificial number and should not be trusted because more than 50% of CPI basket came from food. Well, today the headlines were screaming in all the newspapers today, especially the pink variety. The wholesale price index in India has reached a 11-year high. It is at 10.49%. Why is it at 10.49%? It is because metal, cement and other commodity prices have gone through the roof. In a quixotic move, government has decided to tax petrol and diesel at very high usurious rates. This has meant that petrol and diesel prices continue to rise. Because the petrol and diesel prices continue to rise, you can definitely expect the other commodity prices to go up. This means that sooner or later, these prices will move to the consumer side. Already, if you have been following the news very closely, one is very aware that automobile manufacturers and consumer durable manufacturers have passed on the increases of the prices to the consumer. Basically, car prices, two-wheeler prices, TV, washing machine and those kind of goods prices have gone up in India. Also, because of our problems with China, we decided not to make import from China as difficult. This meant cost of electronics and other products also shot up. And lot of raw material is imported from China and therefore prices went up there also. It is only a matter of time before the wage demand also goes up. What do I mean? That people who are working for 200 rupees a day will now start demanding 250 rupees a day because unless it meets their basic cost needs, they are not going to come out and work for you. So once wage inflation comes, there is going to be a lot of problem. This problem is already very clearly evident in America. If the Reserve Bank, as it promises, is going to keep spending money in buying government bonds and it follows an ultra-loose monetary policy while banks refuse to lend to small and medium level business, what this will mean is the rich get richer and richer and the poor will remain poorer and the middle class will be pushed out. The Economic Times had a recent report today which said nearly 35 million people have made withdrawals from the PF account. That is, the government in a one-time scheme announced that people could take a non-repayable COVID loan against their PF. Nearly 7 million people have accepted and withdrawn money for COVID. But overall premature withdrawals have been at around about 35 million people have withdrawn from PF and EPFO accounts. That is, 35 lakh Indians have found going tough last year and have withdrawn money. This means that there is lot of pain. It was generally assumed that the salaried class had got away with very little impact in COVID wave 1 and the real problem was only in COVID wave 2. But now once these PF figures are known, we knew that there is a large outflow of money from PF and EPFO accounts for savings and for spending during last year. What this meant is people have deliberately chosen to dip into their retirement savings to spend in current. This is because the expenses for medicine and hospitalization have gone through the roof. People have faced huge pay cuts up to 30 to 40% and a lot of people have lost jobs. This meant that emergency cash was needed and people withdrew this. So basically, people who will look for jobs will now look at higher rate. This means India's inflationary expectations is going to be higher. So if the Reserve Bank continues to fuel this policy of easy monetary policy, one can expect us to import inflation because America is going to continue with its ultra loose monetary policy. Commodities will get more expensive. Oil is in a high at $70. If oil gets any more costlier, then petrol prices will hit 100 rupees a liter. All this means that there is going to be huge inflationary pressures. And these inflationary pressures will mean that as soon as COVID is over, Reserve Bank will have to tighten its balance sheet, withdraw its bond purchase program, and increase interest rates. Increased interest rates will mean that even industries which are now struggling and are just barely managing to survive will get finished. And that means they will go down the tube. Economic Times recently carried a report which showed a lot of large corporates had prepaid debt. Tatas have repaid 35,000 crores, money they had borrowed from Tata Steel. Reliance had borrowed a huge sum of money and returned nearly 1,21,000 crores this year. So basically, large corporates are already prepaying loans since they don't need them, and banks are wary of lending to retail, SME and MSME. In this scenario, if interest rates go up, this will mean troubled times for the economy. If RBI continues its accommodative policy, sooner rather than later, we will see inflation go up. And once the genie of inflation goes up, to bring it down will take high interest rates. This means the recovery which we are hoping that would come next year will be postponed further, and it will take nearly 5 years for people to get to where they were before the COVID pandemic. Even if interest rates don't go up, it is going to take up 3 years for people to reach the same level of earnings that they were in 2019-20. Indeed, India is in for difficult times. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.